All right, welcome back for Financially Fit here with Dembski and Taunya Abaya. We took a little hiatus due to summer vacations and out of the office and all that other good stuff that happens in summer, but hopefully we're back at it now. And today we're going to talk about Life Insurance Awareness Month. September is National Life Insurance Awareness Month. If you go to the nonprofit lifehappens.org, you can check out all their good information on that nonprofit life insurance website. But what we're going to talk about today is kind of keep things simple, but talk about the importance of life insurance with financial planning, life insurance, and some of the different products that are out there when it comes to life insurance. Life insurance is very useful in a lot of different circumstances and the different products. It's not a one size fits all with the life insurance name. So I'm going to turn it over to Taunya and talk about the importance of life insurance and financial planning.
Hi, everybody. It's nice to be back. Yes, so life insurance is hugely important for financial planning because financial planning has to do with, really, sometimes Alan calls it family planning. And the idea is that you're pretty much taking care of not only yourself, but your loved ones. Life insurance itself is risk management. The idea is you're almost betting against yourself, but it's so very important because what you're doing is, if something terrible were to happen, and none of us can really predict what the future is, life insurance should protect your loved ones and allow them to continue functioning even when they are mourning your passing. So one of the big things I wanted to say was I was thinking about life insurance, and some people don't need it, but no matter who you are and no matter how maybe type A you are, you got everything covered, everything, you can handle everything. Life doesn't work that way. No matter how much you think you can control. And as you know, you have insurance on auto and home. And the reason for that is you can be the best driver out there. You can be the person who follows every single rule, and you can be rear-ended by somebody who is, looking at their phone when they're driving. You've done nothing wrong, but happenstance happens. The same thing goes with life insurance. One of our best, unfortunately not best things, one of our most common things at the moment is COVID. You can be hit by that. And even there was, especially at the beginning, there was no planning for it. Cancer is another issue. A friend of mine just found out she has thyroid cancer. There was no planning for that. You can't foresee everything. And that's where life insurance comes in, because if something were to happen, your family will be covered. I can take myself as an example. For 6 years, I was a single parent. I had 3 kids. I had a will. If something were to happen to me, if I got hit by a truck, my kids would have been taken in by my brother and sister-in-law, which is wonderful. But that means that my brother and sister-in-law would have gone from having 2 children to having 5 children. That is a financial stressor. There's no way around it. And so if I hadn't had insurance to help cover that, so that at that point in time, the kids would have been mourning me. They would have been, my brother and sister-in-law would have been mourning me. On top of that, if you have financial stress, it can cause not only financial issues, but also emotional issues. So life insurance helps mitigate all of those types of things. The one other thing I'd like to say is, a lot of times, if you are a stay-at-home parent, you think, well, I don't bring any income into this, so I shouldn't need to be insured. I would disagree with that highly. If you are a young couple, you have 2 kids, and something happens to the stay-at-home parent, that other parent, he or she may still be bringing in income, but there are childcare expenses. There are a lot of necessities that you have covered that you don't realize that then need to be covered by one person rather than 2. So
I heard a stat. This is going back a few years, so it could be off a little bit, but I heard a stat a few years back that to replace a stay-at-home mother would cost $120,000.
Yes, that's a year, right?
A year.
Yes,
a year.
Right. It's just amazing what you do when you stay at home. You provide, you allow for that other person to go out and make income and to provide for provide for anybody living in the house, and to have to come up with those, that difference is daunting. So on that note, the way we do provide for those differences, Alan, I'm going to turn it over to Alan, our insurance guru. Take it away.
So I would say what scares people the most in, the time that you've been in this industry, you probably concur with this, is people historically have sold insurance as a product,
Yes.
and people generally don't like to be sold products. They want to be offered a solution to the
Yeah.
problem rather than offered a specific product for just a specific purpose. Life insurance. Well, there's different products out there for life insurance. And what's the purpose of a life insurance? You have your term policy. And the way I always explain term, and I think most people get it this way, is term insurance is like leasing a car. When you lease a car, you pay your monthly car payment. And then at the end of your lease, you have the option to buy or turn it back in. Term insurance is the same concept. You rent your insurance, and then at the end of your term, whether it's 10, 20, 30 years, the insurance company says, well, do you want to buy this out, or do you just want to turn it back in? Now, the majority of people with term policies turn it back in, but it's only for that specific amount of time. Now, insurance is a little bit longer than leasing a car. Most people lease 3 to 4 years. Insurance is obviously a lot longer. What's the point of the insurance? And that's what you need to talk to your advisor about. What's the point of the insurance? Is it for a specific amount of time, or is it for what I wanted to do a long period of time? So if I want it to cover me for my whole life because I want to give some to charity, I want to leave some to my grandkids or kids or somebody else or someplace else, then you got to look into the permanent side. Now, do I want to leave it to charity or to my kids, and I'm not concerned about cash value built up, then a universal life is the way to go, because it's going to be a lower premium, but they don't guarantee the cash value inside that product. Now, in New York, unfortunately, a lot of the death benefits aren't guaranteed as well, but those do change on an annual basis with the insurance companies changing their products. So hopefully someday we can get a few more carriers back that offer a guaranteed death benefit. But as long as you pay your premium, it usually a pretty lengthy lifespan for a universal life. Then you get to, what's the point? Well, maybe I'm fully funded my 401k, or I need somewhere else to put some extra money that I got set aside, but I don't want to get hit with the capital gains and dividends. So I can do a life insurance policy, because I can put money into there. It's guaranteed cash value built up. It's guaranteed death benefit for my lifetime. And if I want to at some point take out money, I can take out some of the cash value. However, you can't take out too much because you can't let that policy lapse. So those are pretty much the 3 types of insurance policies out there. And you always have to be aware, what are you trying to achieve? What's the goal? And then find the product that can fit all those other things that you need to do. If it's just in term, hey, my kids are teenagers, and I got my mortgage is 20 years. I just want something, my big expenses to be covered if something happens to me. Okay, then you just need a term insurance and we can take care of it. I want to leave money to charity. I want to have access to some cash maybe later on. Then maybe a whole life is better for you. So you got to look at what the product is, what it's offering. And now with, it's Life Insurance Awareness Month, but there's products that are life insurance with long-term care acceleration benefits. So looking to see what you're looking to do, and then trying to find the product for you. It doesn't have to be a sales. You can shop online now. It's not like you have to call that insurance agent over and then feel like you're going to be sold something. You can do a lot of research online, Wikipedia, or not Wikipedia, Investopedia. You can go to our website and shop all the nation's top term carriers, the permanent insurances, right from our website without even talking to us first. You can apply online without even talking to us, but I would suggest that you talk to a financial advisor.
It's good to find out. Alan?
Life Insurance Awareness Month to review your current policies. Okay. Ooh, it looks like we have, hopefully we're not getting cut out here.
You kind of disappeared for, well, you stopped for about 30 seconds, 45 seconds.
Well, I guess hopefully it wasn't in a point where I just started to ramble. So we'll have our,
I'd like to say I agree. I think what Alan said was really great. Life in the different types of insurance and what you need to know. If you do, if you take a look at all of your expenses and your debts and your needs, and you think that you don't have enough life insurance, you should talk to somebody. However, make sure that you understand what they are saying back to you. Alan did a great job. I thought that was awesome with about the car, and about the leasing of the car. If you do not understand what the person is trying to provide for you, if they aren't saying it clearly, don't sign anything. Make sure you understand, because the one thing that Alan and I have, and we believe that insurance is necessary, but the one thing that we have discovered is that sometimes people get life insurance that they don't really need. It's not the correct thing. They don't, for instance, a teacher who has a great pension and pays into Social Security, they don't need a life insurance with an income rider. They already have, and they probably already have enough income. So each of your different sorts of riders and each of your different sorts of insurance have different, there's different policies and then different riders. Make sure you understand what it is the person is telling you. Make sure you actually need it, because you can end up paying for things that you just might not need.
right.
Would you agree?
And I think where people get confused too is with their employer's insurance. Generally, that's limited. And if you change employers, that insurance is gone. So it's always good to have your own policy as well, along with not only your personal, but also work, because work is very limited and there is some adverse tax consequences for company paid life insurance based on certain amounts. I mean, we could talk about that at a different time, but certainly supplement your own policy while you're potentially young and healthy, hopefully healthy, that you still qualify, because no matter where you go with your job, if you have a policy, it's not going to lapse if it's personal. Where your job, you're going to lose it. And you might be healthy today, but who knows in 5, 10, 15 years how healthy you are. Hopefully you are, but you just never know.
And term insurance is really not that expensive when you're young and healthy. It's a very, very teeny tiny lease for a car payment. It's not that much at all. So it's easy to handle, and it's worth the cost.
Great. So thank you very much for listening. Don't forget to follow us on YouTube and Facebook. Also, quick disclosure, everything that Taunya and I mentioned is of our own opinion, not of the opinion of Buffalo First Wealth Management. So I think that we'll hold that disclosure there. And thanks for listening, and we will see you again soon.